joining us to take a look at how the markets are playing out is Odwa Magwentshu from Trive Investments. Odwa, Happy New Year to you. Thank you so much for being with us.
Happy New Year to you, Notando. Thank you for having me back.
Well, in my mind, I think volumes are still low. We are still waiting for, the markets to really come online. But markets waiting with bated breath to see what happens with U.S. inflation in December. Odwa, what are you anticipating here?
Just like many investors, I do anticipate a high inflation print to come out with this print for December. That could be detrimental to what the Fed said in their last minutes, as the Fed still remains data dependent in terms of whether they're going to start dropping rates or they're going to continue raising rates or maybe stay at these levels for a longer period. So a lot is weighing on these results or print rather that we're waiting for tomorrow.
I'm wondering also if we are anticipating a 2024 where we'll be on Fed Watchlist. That was really the big theme of 2023, anticipating these meetings, anticipating any clues from any addresses by Jerome Powell and his colleagues, and also, trying to see what comes out of the actual interest rate decisions. Are we expecting a similar feel in 2024?
I do believe so. Right now we are waiting for the cuts to come. So we are still going to be waiting to hear what they have to say. They did also mention otherwise in the previous meeting minutes that perhaps it doesn't have to reach the 2% target that the U.S. is waiting for in terms of inflation. They could start cutting before then. However, they did say that they don't want to be hasty in terms of just, cutting them just yet. They still want to see how it all plays out. And also, we do know that the move from 3% to 2% is the toughest or the longest mile. Mm-hmm. So that's why I believe it's still going to be of importance this year.
I'm also keen to get your thoughts on what we're anticipating in terms of global growth. We have spoken about a recession in the past, and then we stopped speaking about a recession. And I'm wondering if 2024 is the year where we start to see the numbers reflecting recession, just globally and maybe not so much in South Africa, because we've got our own challenges here at home.
Yeah, globally, I think last year was the year for recession with a very, very high inflation rate numbers. So globally, it might not be as heightened as it was in the beginning of last year. However, it all I think it sounded like a broken record. It does play on what the Feds end up doing. However, it doesn't seem like it at the moment. We did see last week a hot job numbers report, but we did see that a couple of times last year as well, and we didn't get into a recession. So this year is not as heightened as it was in the beginning of last year, recession fears, but it is something we could see, or we might not see, but we should look out for.
Let's talk about oil now. Of course, when we saw tensions mounting in the Middle East, we were concerned about what could happen with the price of oil. We actually haven't seen, any of that uptick in the oil price really materializing. But I'm wondering if 2024 there's any demand and supply concerns that could put pressure on the oil price.
Definitely supply concerns coming about. We're seeing what's happening in the Red Sea right now. Still intensifying, and it could actually end up going on for a much longer period. We are also seeing in Libya there's some strikes happening, taking off 300,000 barrels out of the market per day. Supply-wise, we are seeing some pressures mounting there. We haven't seen it, however, translate into the oil price. Oil price is still relatively soft. As time goes by, we could see more pressures on that front, because we did see BP announce that they are looking to redirect their ships from the Red Sea because of the conflict there.
keen to bring it home now, Odwa. Let's talk about our own equity market here at home. Now, of course, we know right now SA Inc. is dirt cheap. Last year was a year of absolutely beating our stocks down. Are we anticipating, a period where we might see a bit of recovery there? Or are South Africa's issues a little bit more tricky? I think even going to an election year, that might, dumb down our investment case.
I think in particular in South Africa, it's the infrastructure that is the biggest upset or biggest cause of a downside look for the market. That is definitely hurting us. We are seeing as well palladium or platinum miners getting hit quite tragically or quite significantly rather. The palladium price continues to drop. China's story is not changing. We're not seeing any major growth on that front. So we could see this actually hurt us a bit more. And the Rand, hopefully, load shedding was hopefully going to be ending in December, but January started, it came back again. So with that as well, we could see such as your Pick and Pays, which got hurt quite a bit with load shedding fees or expenses. So some of these companies could continue to face some challenging times ahead.
Well, I'm keen to get your stock pick, but first I'd like us to reflect on counters that have found favor with your industry peers.
Our favorite stock picks has always been ASML. ASML is the Dutch company that actually manufactures the machines that prints the chips. This company is a wide moat. It is really the only company in the world that actually manufactures the machines that can manufacture those high-end chips. And these are the chips that are used in defense. They're used in artificial intelligence. They're used in your cars, your Teslas, and things like that. So I don't think this is a dripping roast right now. It is quite a cyclical sector. But if you're going to buy into the artificial intelligence theme, and I really do, you do need this company and the technology behind it. So buy into downswings when you get the opportunity. This is a nice stock for a long-term portfolio.
All right, ASML, keen to get your thoughts on that counter, Odwa.
ASML is a very good company to look at. As she said, it is, the only manufacturer of the machines that produce chips. So that for me is what's good about it. However, we have to also take into consideration last week they had just announced that they're not going to ship further into China, which was 13% of the business's revenue. So yes, it's a great company. However, they could see a shortfall in revenue, not in this print. However, going forward, they could see it by cutting China.
And let's talk about your favorite counter today, Odwa. What stock are you going with?
Today, I'm going with Meta Platforms, obviously formerly known as Facebook. The business had a terrible 2022, however, a very good 2023, going up nearly 200%. And this is after they strategically restructured efforts in the company, not focusing on the metaverse anymore, and we saw some great growth in the third quarter and potential with, if you look at X rather losing advertising revenue, they could benefit from that as well. So that's my stock pick.
Odwa, it's been a pleasure speaking to you today. Thank you so much for your time. That was Odwa Magwentshu from Trive Investments South Africa.